How's it going, traders? Welcome to the episode 1 of my new series, Reversal to Expansion and Introduction to my STX model. In this series, I'll be breaking down the market's weekly price delivery using a simple, repeatable framework, starting from the daily bias formation all the way down to the lower time frame execution. This approach is built on ICT concepts and the Fractal model. I will be using visual schematics and retrade recaps to show you exactly how I navigate the market each week with precision and consistency. This documentation will primarily focus on gold, XAU USD, a pair I study and trade consistently due to its clean delivery and high volatility during key section. The STX model is based on one core principle. After a reversal, expansion should follow. So the goal is to position ourselves around the expansion phase, capturing the bulk of the candle body and not the wick. I hunt for high probability reversal points, typically found below old lows and within key levels, and then look to trade the expansion leg that follows. In this first episode, I'll break down how I framed bullish reversal early in the week and how I executed multiple trades throughout, all based on structure and bias formed from the higher time frame. This is the beginning of a long-time journey, one of documentation, refinement, and mysteries. So let's get into it. So on the left, we have two weekly candles, the previous week's bearish candle and the current week labeled as W1. We opened near the previous week lows and sweep below it on Monday. This sweep of the previous week's low signal potential liquidity grab and set the stage for a bullish reversal. What confirms this reversal is the fact that Monday closes back inside the prior week's range. This gives me high conviction that we are about to see an expansion to the upside and potentially to the equilibrium of previous week range and the previous week high for long time weekly targets. And according to my STX model, reversal leads to expansion, and this reversal formed early in the week, which is ideal. On Tuesday, we get C3 style bullish continuation, following through from Monday's reversal. Wednesday give us a clean continuation again, the C4 candle. Then on Thursday, price taps into an intra-week key level, possibly driven by NFP volatility. And Friday attempts to continue, but the market is already fading and we get a weaker close. This entire profile frames the higher time frames bullish bias for the week. Now, let's dive into each daily candle, break it into 4-hour structure, and I'll walk you through how I approach intraday narrative and execute my trades with precision. On Monday, after price swept below the previous week's low, I noticed that Asian section 6 p.m. candle took out that low and closed back inside the prior range. This gave me my first confirmation Asia had likely formed the low of the day. Now with the low set, my expectation going into London and New York was for bullish continuation. During London, price created an intraday swing structure. This added more confidence. Specifically, I view the 6 a.m. London candle as a candle 2 closure, showing structure shift and preparing for the next move. This setup aligns perfectly with my STX model logic. Reversal confirmed early, bias aligned with higher time frame sweep and reclaim. London provided the structure. Now we wait for New York 10 a.m. expansion. I marked the 10 a.m. candle open and dropped to the 1-hour chart to profile for continuation. From there, I built my narrative, identified where I wanted to be involved, and dropped down to the 5-minute chart for precise execution. Let's move into that now, and I will show you exactly where and why I entered the trade. So on the hourly chart, I'm looking for price to create the 10 a.m. low and expand towards our buy side objective. On this time frame, I also want to identify a buy side liquidity level that price might want to run into. Right here, this is the 10 a.m. candle open. It set the low and closes as a bullish candle. Now, if we want an expansion to happen, we want to see it happen fast, either in the first or second cycle of the move. Remember, the 10 a.m. 4-hour candle is made up of 4 1-hour candles. So ideally, I want to see the low formed either in the first or second hour, which would be the 11 a.m. candle. Once 10 a.m. closed bullish, I knew I wanted to position myself into the 11 a.m. distribution, targeting the low hanging fruit at the buy side liquidity and potentially the equilibrium of the previous week's range. Let's now go into the 5-minute chart and I'll show you how I executed my entry from that 11 a.m. candle, how I scaled out and how I took profit. So on the 5-minute chart, I'm looking for a liquidity sweep, a change in state of delivery, and SMT divergence to confirm my entry. Right here, we get the 5-minute CSD, the change in state, and it happens on the 11:15 candlestick. As soon as I spot that CSD candle, I enter my position. I place my stop loss just below the 11 o'clock candle low, which also marks the CSD candle's low. My target is a 2R in the direction of higher time frame expansion, and I'm aiming for the buy side liquidity sitting above the London high. That's my first low hanging fruit. I'm also planning to leave a runner for the long-term buy side objective. And as you can see, price runs straight into our take profit at the London high, where I take partial, then I leave a runner targeting the higher liquidity level. That's the kind of expansion leg I always want to be positioned in. Clean, directional, with higher time frame backing. This trade yielded me about 3.4R. So now let's get into the next day, Tuesday, and I will show you how I approach that section price action. So right here in Tuesday's price action, I'm still leaning on the bullish bias and looking to sync myself with the expansion leg. To the left, we've got the Tuesday daily structure, and to the right, we've got the 4-hour structure. Since we already formed the low of the week on Monday, which becomes our C2, I'm anticipating Tuesday to print the C3 continuation in the price leg. Now, we see Asia open up and start the expansion, and London follows through by continuing that expansion. We get the daily opening price at the Asia section, that is 18 o'clock, and price starts expanding right off that level. That gives me confirmation that the market has no time to wait below the opening. That's the ID signature of an expansion. So my plan here is to position myself inside this 2 a.m. London candle for continuation move. Let's drop down into the 1-hour chart to show how I position inside this candle to catch the expansion. So right here on the 1-hour chart, we've got the 2 a.m. 4-hour candle opening up. Now, what gave me confidence to take this trade was the fact that we still had our buy side objective intact. Price has not cleared that liquidity yet. That told me we may still want to run those low angry fruits. We get the 2 a.m. open, and at this point, after identifying the objective, I'm also watching to see if this 4-hour candle is going to set the low early, either in the first or second hour, so we can actually expand towards our buy side liquidity. Now, the 2 a.m. candle opens, sets the low, and closes bullish. That gave me confirmation that the next candle, the 3 a.m., should expand higher towards that liquidity. So I positioned myself within this 3 a.m. London window and execute my trade here, targeting that buy side liquidity. Let's drop to the 5-minute chart, and I will show you how I executed it. And right here on the 5-minute chart, what am I looking for? I'm looking for a liquidity sweep and a change in state of delivery. Simple. So we see the 2 a.m. 4-hour London candle open up, set the low, sweep sell side liquidity, and then give us a clear change in state of delivery on this 2:40 a.m. candle. Right after spotting that CSD, I take my entry, placing my stop loss below the 2 a.m. candle low, which also happens to be the CSD candle's low. From there, I'm targeting buy side liquidity for a clean 2R. Price runs straight to the take profit, and I secure the 2R on that trade. Straightforward setup, clean, logical, and mechanical. I wait for the low to be set, wait for change in state of delivery, and then I execute. Nothing forced. Now let's jump into the next day, Wednesday, and break down how I approached that price action. Since Tuesday's closed as a bullish candle, I'm still anticipating a bullish continuation in Wednesday price action, which would print our C4 continuation candle. To the left of the chart, we've got the daily structure, and to the right, the 4-hour structure. On the 4-hour, you will see price open up, and the 2 a.m. London candle set the low of the day, then closed back as a bullish candle after taking out Asian liquidity. That gives us a clear C2 closure and confirms that price is willing to run to the buy side today. Now, once I see the low has been set, the next thing I'm looking for is where to position myself inside that expansion leg. So again, I wait for the New York section to come in, and I typically aim to position myself inside the 10 a.m. expansion candle. Now, if you look closely, you will notice we reversed off the 6 a.m. low and started expanding inside that same 10 a.m. candle. So let's drop down to the 1-hour chart, and I will show you how I profiled and positioned myself into this 10 a.m. 4-hour expansion. Now, on the 1 hour chart, this is where it gets a little tricky because I actually took a loss inside the 9 a.m. candle. So here is what happened. I waited for the news driver to drop, and after the release, I tried to long inside the 9 a.m. New York candle, thinking the expansion would follow through instantly, especially after the news had already taken out some sell-side liquidity and retraced back into this hourly fair value gap. But I didn't wait for enough confirmation. I entered too early and I got stopped out almost immediately. If you look to the left of the chart, you'll notice we still have a clear buy side objective resting at the previous day's high. After getting stopped out of that early entry, I waited for the 10 a.m. 4-hour New York candle to open up. Now, inside that 10 a.m. candle, you'll notice price is reversing off the 9 a.m. low, which is also the reaction of the 6 a.m. 4-hour low. That gave me the narrative I needed, so I took another entry inside the 10 a.m. candle, targeting a clean 2-hour profit. Then I took a second entry inside the 11 a.m. to 12 p.m. candle, and for that one, I was aiming for the data high and also our daily buy side objective, which is still the previous day's high. Right here, let's drop down to the 5-minute chart and I'll show you how exactly I executed this trade in real time. So right here on the 5-minute chart, this is where I try to take my first position at the 8:45 change in state of delivery. I set my stop loss below the 8:30 candle low, but I got stopped out almost immediately. After that, I waited for the 10 a.m. New York candle to open, and it opened right around this level. We see price take out the 8 o'clock to 8:30 high impact news candle low, and from there, we get a clean change in state of delivery. This gave me confirmation that 10 a.m. candle has set its low, and now I'm looking to position myself in the expansion. I took my entry on the body closure above the CSD candle, set my stop loss below the low, and I was aiming for a 2 reward at this stage. And as you can see, price runs directly to the buy side, delivering our first take profit at 2R. Then I noticed we still have a buy side liquidity sitting at the 8:50 news driver high. The data high is still intact. So I looked to align myself with another position after spotting another change in state of delivery inside the 12:40 candle. That's our New York PM section. I set my stop loss below the low, and this time I was targeting the data high again, aiming for 2R in the direction of both our buy side liquidity and the previous day's high. Price hit our target almost immediately, a very clean trade that gave me a total gain of around 3R on the day. Now let's get into the next day, which is NFP, and I'll walk you through how I approached it. So on Thursday, NFP day, I didn't take any trades. First off, I was expecting bullish continuation, but more importantly, I don't trade before any of the big 3 news events, NFP, CPI or FOMC. I always wait for the news driver to be delivered first, then I look for setup after. Now, if you look at the 4-hour structure, we saw Asia open up and create a range, and then price started forming a bearish reversal inside that Asia range. That already goes against my bullish narrative, so that's an invalidation for me. Also, the 6 a.m. candle came in and pretend the bulk body of the daily candle. So from there, I didn't expect the 10 a.m. to reverse cleanly bullish anymore. The 6 a.m. news candle already gave us the range, so that's how I avoided trading anything on Thursday. And moving to Friday, again no trade for me. We had the daily open right here and price kept pushing bullish from the Asian section. At 6 a.m, London gave us a nice C2 closure, and I was watching for the 10 a.m. bullish continuation, but I didn't take it because the 1-hour structure wasn't convincing enough, and there was a bank holiday sentiment hanging in the background. And in general, I don't go into Fridays with much conviction, especially after a big news day. So I passed, no FOMO, no forcing. So yeah, that wraps up how I approach every single day of this week. Whether I executed or stayed on the sidelines, I was always following my candlestick profiling model and respecting my structure. And overall, solid week. Across all the trades I took, I ended up catching 8.5R in total. Clean setups, good execution, and most importantly, I stayed disciplined. If you found value in this breakdown, make sure to like, comment, and subscribe to stay tapped in. I also dropped some of my live execution and breakdowns for free in my Telegram channel. The link is in the description below, and you will find the PDF file there too. This is just the beginning of a long-term journey. Each week, I'll continue documenting my thought process, refining the framework, and sharing real execution insights. Thanks for staying around, and I will see you in the next episode.